Ever see a big news headline hit the wires and then just watch the price of gold go wild? I mean, it can feel totally random, right? Well, in this explainer, we're going to pull back the curtain on that chaos. We're going to turn those confusing headlines into a simple, clear guide for understanding gold.
Seriously, it's a great question. Why on earth would a report about jobs have anything to do with a hunk of precious metal? Well, I promise you, it's not random at all. There's a really clear cause and effect chain happening here. And once you see it, you'll start reading these headlines in a whole new way.
Okay, so before we can start decoding the news, we've got to look under the hood. There are really four main forces that are constantly pushing and pulling on the price of gold. But, one of them is so powerful, it pretty much influences all the others. Let's start there.
And here it is. This is the absolute master key to understanding gold. Its relationship with the US dollar. Because gold is priced in dollars all around the world, the two are just locked in this constant dance. When one of them makes a move, the other almost always reacts.
The easiest way to think about it is like a seesaw, right? When the US dollar gets stronger and goes up, the price of gold tends to go down. And why is that? Well, it's pretty simple. A stronger dollar means you need fewer of them to buy the exact same ounce of gold. So of course, when the dollar gets weaker, gold tends to rise. They almost always move in opposite directions.
So, that US dollar, that's our North Star. Everything else kind of orbits around it. You've got interest rates, which are set by the US central bank, the Fed, and those directly impact the dollar's value. Then you have inflation reports, which basically tell us how fast the dollar is losing its buying power. And finally, you've got geopolitical risk, big, scary world events that make investors nervous and send them running for the safety of gold when they lose faith in paper money.
All right, so now we know the four key drivers. But how do we connect those big ideas to the actual news headlines that flash across our screens every day? That's the next piece of the puzzle, turning those headlines into actual trading signals.
This little table here really breaks down that chain reaction. So let's just take that first row. Let's say we get some really strong economic data out of the US, like a great jobs report or an inflation number that's higher than expected. That suggests the economy is healthy, which usually strengthens the dollar. The effect is generally bearish for gold, meaning the price is likely to head down. And of course, the opposite is true. Weak data can weaken the dollar, which is usually bullish for gold, sending it up. It's really just a domino effect.
Okay, knowing the rules is one thing, but actually applying them in the heat of the moment when things are moving fast, that's a whole different ballgame. So let's put together a super simple three-step playbook that you can use for any major news event. It'll help you stay prepared and disciplined.
So here's the game plan. Step 1 is before the news even hits. You've got to know what's coming. Check an economic calendar for the big stuff. Central bank meetings, inflation reports, jobs numbers. Step 2 is during the release. All you have to do is compare the actual number to what the experts were forecasting. Is it better? Is it worse? That's your signal. And finally, and listen, this part is absolutely crucial, step 3 is after the release. You have to wait. The first knee-jerk reaction is often a total fake-out. Give the market about 5 to 15 minutes to digest the news and show you its true direction.
Let's walk through a quick example. So imagine the big inflation report, the CPI, is expected to come in at 3.2%. But boom, the actual number is 3.5%. That's hotter than expected. This tells the market that the central bank might have to keep interest rates high to fight inflation, which strengthens the dollar. And what does a strong dollar mean? That's right, it's a bearish signal for gold.
Now let's flip it. Let's say the big US jobs report was supposed to show 200,000 new jobs were added, but the actual number comes in way weaker, at only 150,000. This could be a sign that the economy is slowing down, which might make the central bank think about cutting interest rates. That would weaken the dollar, creating a bullish signal for gold. See how that works?
Okay, we've got the drivers, we've got the playbook. But there is one final rule that ties this all together. It's a strategy that really separates the beginners from the pros. It's all about how you combine what you learn from the news with a real plan of attack.
And here is that core idea. The news itself. It's not a green light to just jump in and trade. It's a tool that helps you form an opinion, what traders call a bias. It tells you which direction you should probably be looking, but it doesn't tell you the exact moment to pull the trigger. It's like the old saying goes, use the news to form a bias, then use charts for confirmation.
So this really breaks down into a simple two-part strategy. First, use the news to figure out your bias. Are you feeling bullish on gold or are you feeling bearish? Second, you turn to the price charts to get your confirmation. You're not just trading blind on a headline. You're looking for a specific price level or a pattern on the chart that backs up your idea, and gives you a smart entry point. Put it this way, the news tells you what to do, but the charts tell you when and where to do it.
So let's boil this entire thing down to 3 simple rules you can take with you. Good news for the U.S. economy? That usually means a stronger dollar, which pushes gold down. Bad news for the U.S. economy? That can mean a weaker dollar pushing gold up. And finally, when there's chaos or tension around the world, investors look for safety, and that demand for a safe haven often pushes gold's price up.
So, the next time a big economic headline hits, you're not going to be sitting there wondering what just happened. You'll know exactly what to look for, and you'll see how it all connects back to the price of gold. You have the playbook now. The only question is, what news are you going to be watching? Thanks for joining us.